Okay, folks, good morning. Good morning and welcome to Swing Trading Today. It is 5 a.m. Eastern Standard Time, June the 24th. Today is going to be a very interesting day because yesterday we had ISM services come in with a miss. The ISM manufacturing index came in with a beat, citing inflation, the lack of talent, and the need to increase wages because the government, these small companies and large companies at that, are competing against the federal government to get employees. Because the federal government is paying people more to stay home. And I believe it's tax-free. No brainer. Amazing how far we've fallen as a country. So let's begin with the economic data to continue my thoughts here before I go off onto a tirade. And these are the reports I referenced. Services yesterday, a miss. This is the largest segment of our economy, a miss. The PMI manufacturing index signaled expansion. Any number above 50 is a sign of expansion. Anything below is contraction. So both segments of the economy continue to grow healthily, but the services number missed. New home sales missed. Initial jobless claims are coming out this morning. Remember, it was last week where the expectation was for about 360,000 initial jobless claims. This week, they're expecting 380,000. Last week, there was a huge miss, meaning the actual number came out above 400,000. So let's hope that this continues its trend down or resumes its trend down later on this morning as well. At 8:30 a.m. Eastern Standard Time, durable goods. Those are your washing machines, your dryers, etc. And then also at 8:30, there's going to be fireworks at 8:30 today, Eastern Standard Time. We're going to get the revision to Q1 GDP. Now, I go over this often. The Buffett indicator and at current, the Buffett indicator uses a measure of total market capitalization divided by, I believe it is, yes, divided by the size of the economy. So we're already at, nosebleed levels here, meaning overvalued, strongly overvalued, using their words. They probably never thought they were going to get beyond a 2 standard deviation. We're up and into a 3 standard deviation valuation using the Buffett indicator. And here's a footnote here, just to put this all into perspective. Values greater than 2 standard deviations, of which we are well above, historic trend should occur 2% of the time. We are at a 3 standard deviation move from this historical norm. I don't know what's going to pop this bubble. I have no idea. But man, look out below when it goes. So that's what's happening this morning. Tomorrow, consumer spending. And the most important number for tomorrow, because there's a lot of chatter out there about inflation. These inflation data point numbers, we get the PPI, it's the producer price index, the CPI, it's the consumer price index, the PCE price index. That's the one being released tomorrow. This is the one the Federal Reserve watches most. These reports haven't had enough attention, or you really haven't needed to have them have a lot of attention for the past many years, because there hasn't been much headline inflation. That's changed these past couple of months. So this is becoming a more important number than in years past. So very critical to keep an eye on it. especially if we have uh, initial jobless claims continue to rise. We have job openings that continue not to get filled, and we see a rise in consumer spending and a rise in the PCE. That means that people are just using their credit cards, government checks. They're not working, so they're not adding to production. They're consuming, not adding to production because they're watching Netflix, and prices are only going to go up higher. So keep an eye on these economic reports coming out these next couple of trading days. Now, let's take a look at the market. I think what we saw yesterday on the US dollar and on the price of gold, we saw a lot of front running of these reports. So what did they do yesterday? Initially, on gold anyway, let's go to a 1 hour chart. The initial reaction yesterday was to bid gold up higher, but then it faded. You had a bearish reversal bar on the day yesterday. You can see we're bouncing back this morning. And inversely, you saw the US dollar, which I had warned about having a head and shoulders setup, which followed through to the downside. It initially sold off yesterday, only to bounce back. Now, we remain in the trading range. No breakdown or breakout here, but gold is making a pretty healthy comeback this morning as it begins to recapture support levels. We still have one resistance level above to recapture here. Now, the daily chart of gold, the miners, was very, very bearish. If we gap up, we have an inside day, or if amazingly we happen to gap up above the highs of yesterday, all is right with the world. But if we get a continuation move lower today, expect more pain for gold and the miners. We are entering a seasonally favorable period of time, July, August. So that's why we're holding on to our positions, looking to add more. But we want to see a sign of strength. I did not go buying yesterday on that weakness because, in all probability, the daily chart was saying, you know what, you're probably going to get some follow through to the downside here. You may, given the economic data, see a gap up higher. Yesterday could have been a washout of weak longs. We're open-minded, but we're not. Hope is not a strategy. We're not going to hope when we should fear. So those two items are looking, one, gold better. The dollar, iffy. Not sure where it's going to go. But I think ultimately it is going down. Silver, nice rebound here. It did not break down yesterday. It had broken out, in fact. And this was on Tuesday. Consolidation, continuation move, retrace. Now we're trying to move up higher yet again. We're down in the morning. But silver looking a bit more constructive. Let's pull back here to a 4-hour chart to get a higher level view of the battlefield. And you can see orderly consolidation. The bias appears to be to the upside for silver, of which you are positioned long. Let's take a look at equities. The Russell 2000 up over a 0.5 percentage point. Strong price action. The S&P 500 up as well, nearly a 0.5 percentage point. Nearing resistance. Do we break out? Do we break down? Not quite sure, but the path of least resistance remains higher. You have to wonder, though, how much. Look at the NASDAQ this morning. NASDAQ up 0.6%, nearing this rising upper band of resistance in green. You have to wonder, at what point do we get some institutional sellers in here that believe that the rhetoric that some Fed governors are spewing, that they're going to be looking to taper in 2022. I think it's Bullard, Kaplan, They're looking for a tapering in 2022. Not that they're going to get it, but they're jawboning. And they're trying to play the bad cop, the Powell's good cop, and Cash Carey's good cop. That when do they begin to say, all right, the Fed put is over and done with? We've seen some selling on this jawboning down. At what point do people say, the veneer is running thin on the Federal Reserve? We can't really trust them anymore. With the markets this strongly overvalued and technically extended, at what point do we say we got to pull the ripcord here, move to cash, perhaps move into commodities? Because even the Federal Reserve came out yesterday and said, you know what? Inflation may not be as transitory as we believe. It's transitory meaning temporary. So, what is transitory? It's really a relative term, right? What is temporary? Well, a human being is here on a transitory basis, usually on average 75 years or so. So what is transitory? A year, 2 years? We don't know. They're very vague. They speak in all innuendo. So we don't know what they mean, but they're becoming more and more broad-based with the word temporary or transitory. So the manufacturing PMI yesterday was clear. There's inflation in manufacturing that will be passed along to the consumer because the producer can no longer afford to absorb it. We've seen it. It's already here. So it's not opinion. So the indexes are looking good in advance of the economic data coming out today. Now, the direction of most of these indexes relies heavily on the 10-year yield. This is the 10-year Treasury note. So it is down at current, meaning that yields are pressing up higher. So these past few days, we've had, let me go to the bond prices here. Bond yields, I should say. We've had the tech sector shrug off rising yields. It's because we're down below 1.5%. We start budging up against 1.5%. Yeah, the 10 years at 1.499. So we're right there. At some point in time, let's go back to we could use the TNX. This is the 10-year yield. We're right up here. This is not open yet. This is not trading yet. This is as of yesterday. We're right here right now at 1.499. At some point in time, this index is going to take it on the chin. Right now, it's keeping it up. It's not purely tech. Yesterday, you saw the XLK, the technology ETF, bearish reversal bar. S&P 500, bearish reversal bar. Dow Jones, bearish reversal bar. What's keeping this sector up right now? I'm going to presume that in the pre-market, you're seeing energy and transports bid. Tech, not as much, but your mega tech, yes, they're moving up higher. Let's take a quick peek at Microsoft in the pre-market. That's the largest component of the triple Qs. It is up. They closed at 265.27 yesterday. We're up over $1 this morning in the pre-market. Apple, which is the second largest component of the Qs. I typed it wrong. Apple up as well this morning. Closed at 233.70, last tick, 234.30. So they're bidding the mega caps up. If the yield continues to press above 1.5, watch pressure on these names. You have the PCE coming out tomorrow. If that comes out hot, you're going to see yields go like this and tech go like this. So beware. Sam, good morning. The Fed is a joke like the ECB. I mean, Bob, before petroleum was, I know petroleum is so much more expensive here. India is closed for corona. Oh, the Delta variant. Yeah, I know. They're trying to push that here as a new need to shut down. Uh, I don't even want to comment on the virus because YouTube is so ridiculously sensitive to free speech. It's ridiculous. Let's check out Bitcoin. Bitcoin bidding here up over a percentage point. Is this over and done with this sell-off? Let's take a look. You can't say it is because Bitcoin, ruthless sell-off. I honestly don't think that you could say this sell-off is over until we close above, let's call it 38,000. Where are we now? 33,290. So we're wedging out here on Bitcoin, 4-hour time frame. Natty Gas, good day yesterday. Bit of a reversal now. We've been bullish on it. We remain bullish. Let's take a quick peek at, I want to check out lumber. I want to see if that has begun to base. Because all you hear now are people coming out saying, oh, inflation's over. Look at lumber prices. They've collapsed. Well, I can see them consolidating. They've corrected. They're consolidating. And what a lot of people don't realize is that you had a number of millers, I guess, or distributors of lumber. They were hoarding lumber. And they dumped it on the market, which is why you saw a huge gap down on lumber. So that hoarding is finite by nature. So we'll see whether or not they run through those stockpiles and whether prices begin to creep back up yet again. Now, in other areas of the commodity complex, and this is the reason why I go through the commodity complex so much, is that the government lies, right? They don't tell us the truth. So the only thing that we have to go by are the charts of commodities. We've been doing that for years now. And I've been saying, inflation is here. Don't listen to the government. Look at this. Home heating oil. This is a 4-hour chart. Need more evidence? Let's go to a weekly chart. This began back in April, this move up higher. Cattle. Cattle is making a big move here. It's getting ready to break out to new 52-week highs. So no correction in cattle. Cattle prices proceed higher. Hogs coming in a little bit here, but this is a correction. This is not a collapse. They were overbought. They're pulling back. Platinum has been really quiet of late. Trying to find a bottom. I haven't taken a look at gold today on a weekly time frame. Oh, folks, tonight we're going live, 6 p.m. Eastern Standard Time. Link below to one of the email lists. Get notified 15 minutes to a half hour prior to us going live here on YouTube, or click the bell button, hit the subscribe button, like button. You know the deal. So gold new weekly low. I have an alert set here to remind me if we do hit a new weekly low. We're up on the week. Let's check out copper. Where's copper? And then we'll take a look at some ag prices, and we'll move on over to chart requests. Where's my copper? I just saw it. Now, the thing to remember about copper, industrial metals, the Chinese are releasing supply to pop the commodity bubble, or attempt to. Government sucks at everything. I don't care if it's China, U.S., they suck at everything. So the minute they put their hands on trying to fix prices, I don't want to bore everybody. Forget about copper. Uh, Prices usually go higher after a while. Just like Nixon when he did wage and price controls after delinking from gold. Corn prices, they were correcting, now stabilizing, rising off the lower band of support. This is a weekly chart. This is no joke. So it looks like we're getting ready to break out here in the next couple of weeks. Soybeans, which really took it on the chin last week, are still weak this week. Pun intended. Oats consolidating. So yeah, commodity prices are taking a breather, but they are not done with their rally. I give up on copper. Let's go to some chart requests. Folks, we're going to be using TrendSpider automated technical analysis, the use of algorithms, seasonality charts, and scanners. Link below, 35% discount code, cheapest price on the web. So take advantage of it, please. And let's go to Taiwan Semiconductor. Daily chart looks awesome. Weekly chart not as awesome, but this could get resolved today. So the weekly chart we bounced off of. Let's take the automated trend lines off. And, all right, so here's your high or low. Right? We've had a nasty sell-off. We have a high or low. Now let's throw up our automated trend lines, our manually drawn trend lines, and there's resistance. We're struggling with it. We're right there. Right there. Now, volume is okay this week. It'll probably come in about average, which is okay. That's fine. Let's take a look at seasonality before we go to the daily chart. This is only 2 years. Ignore that. It defaulted back to that. I don't go by 2 years. That's too thin of data. I usually like to go with 12 years when it's available. So you have so many new stocks out there. There we go. 12 years. So July, let's begin actually with June. June, a seasonally weak period of time. In fact, June is the second weakest month of the year, which surprisingly, the weakest being December of all months. So much for the Santa Claus rally for Taiwan Semi. But July, it picks up nicely to normally trade on average at 67% up for the month of July. Not the best month out of the year, but it's certainly an improvement over June over the past 12 years. Now, taking a look at the daily chart, we had a really nice day on the 22nd. Yesterday, we gapped up higher. There was a rejection at resistance. So what I would want to know here is this. I want to create an alert at this moving average. I want to know if we break through it. I don't want any sensitivity. Just memorializing my observation from the weekly chart on Taiwan Semi. I didn't want 15 days, 5 days. Okay. So our alert is set here on Taiwan Semi. Really nothing to do because yesterday was a bearish reversal bar. This was a common candlestick that we saw across the tech spectrum. If you bring up the XLK yesterday, the technology sector ETF, we faded off the highs of the day. Let's check out the SMH. Same deal here. So wait for a breakout on Taiwan Semi. Sam, there is something I can't understand. They can raise prices, but people will not buy it like before. So, well, the problem is, I don't know if they're doing this in Europe, but they're paying people to stay home. Are they doing that in Europe as well? And here in the States, they're being paid more to stay home. Those folks in the minimum wage area, they could be slightly above it, but definitely below it, they're staying home. And I believe that money is tax-free. So they're getting paid more to get paid tax-free. So they're using that money not to buy stocks anymore, not as much as they were anyway, but to buy goods. So if there's nobody that's buying, well, excuse me, if there's nobody that's producing, yet people are buying, that's going to force prices up. Some states are cutting or ending those generous benefits. And those are your red states like Florida, Texas, and whatnot, because they get it. All right, Google. The weekly chart looks pretty good on Google. We're sitting on top of the Keltner band channels. No automated trend lines above, and the automated trend lines are down here as support. Let's overlay, I didn't want to do that. Let's overlay monthly. So you can see here in dashed line, weekly chart, I just overlaid a resistance level way up here. So Google has a lot of room to run should we break out. And taking a look at the daily chart, we do have, this is the automated trend lines, folks. I'm going to take them off, put them on, and you can see we have multiple resistance levels above. I would be interested, should we break above this one in red. No sensitivity. Because I don't want to, if we broke out above this line in blue, you still have resistance above. So really all I care about is a breakout up and through 2459.30. And this resistance level here in green may just act as a rising upper band of resistance. So if I do open up a long trade, I'm going to stay small and then watch and see what happens to see whether or not we're able to break out above this resistance level, or will in fact that act as a rising upper band of resistance. This line in blue should act as a rising floor for the shares. I don't like volume. Volume has been trending down. Let's clear off this alert. That fired off already. And with that, folks, everybody have a profitable trading day. Again, join us tonight, 6 p.m. Eastern Standard Time on YouTube. We'll go live. We're going to go over the weekly charts, and we'll get our cursory look at how we're poised to close out the week, because Thursday, that's when we begin to strategize about next week. And then on Saturdays with members, we revisit the same weekly charts, and we decide what will our strategy be for the new trading week. Will we reduce position sizing, add what are our watch stocks? And it's a good session, about 25 minutes long. So take advantage, 14-day free trial with the Contrarian Trader, TrendSpider free for silver and gold level members, or they have a 7-day free trial themselves. Again, link below, 35% discount code for TrendSpider. Have a profitable trading day. Stay well. Be safe. Take care.